my house price prediction for 2024. Hey guys, my name is Rahim. Welcome back to my channel. If you're new to my channel, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. In this video, I'm going to share with you my prediction of the property market for 2024. But before we get to that, I've got a nice little appeal to make. We've done a research. We've noticed 51% of the people that are watching my video have not subscribed to my channel. I kindly ask you to please hit the subscribe button to help grow this family to a bigger and bigger and bigger family. And whilst you're there, smash that like button as well to help the algorithm to push the video so it can reach wider and wider and wider audience. So what is my prediction for 2024? You see, it's a mixed bag. When you go online, see some property experts are saying property prices will go up by 5 to 7% in 2024. You've got some people saying we're going to have a property crash. We've got people saying it's going to be doom and gloom. I'm going to give you my perfect opinion and understanding based on my research and where my properties are at and what values I'm seeing happening in my property investment portfolio and what I think may happen in the UK property market. Stick till the end to understand exactly how my portfolio is doing, what sort of things is going on with my investment and what I intend to do. So my prediction is that we would see a moderate decrease on the property market in the UK in 2024. My prediction, I think it would go down by maybe 3 to 5%. It would be around that because people are still struggling with the hike on interest rate and people are still worried that interest rates may go up as well. And of course, all landlords that have never increased rent for their tenant or hardly increased rent for their tenant are struggling. They may not have eaten to all the money they may have made during the property booming period. So I can see maybe it would increase slightly because they'll be pushing more of their properties in order to be able to move out of the market completely. So that could then become a bit of a flood of properties in the market that then will squeeze the price a little bit down to maybe 3 to 5%. And the exact figure may vary as well, depending on locations here as well. So that's just my prediction. Then that's what I think is going to happen. I don't have a crystal ball on it, but it's what I've studied and see is happening in the property market. So that's what I think. So now, as an investor, what are the opportunities can we take during this time? As an investor, knowing that the property prices would be going down or property value be going down by 3 to 5%, it's important we capitalize in that advantage. So what you could do then, knowing that is happening, especially in a specific area, property prices going down, maybe that's the time you want to go in, right? So you can buy these properties at discount. You may be able to get 5, 10, 15, or maybe 20 to 35% discount. So once you've got those discounts, you'll be able to literally capitalize on that and buy a few more properties, because that's what investors do. You want to buy low and then hopefully then the property price goes up, and when it goes up you remortgage and put some of your money out so you can go again buy more houses. And the rental market is doing really well at the moment because honestly there's no lot for property there to rent, so the rent has literally gone up significantly. We've done a research in my estate agency just last week. We look at the average rental prices in Cardiff. Houses that were going for £800 are now renting for £1,200. That is £400 increase in the same property. The same property that you could have rented a couple of years ago for £800 is not going for £1,200. So that is showing a buoyant sort of rental market. And what does that do is basically showing that people are not buying houses and there are less houses available and there are more people looking for houses, and then that enforces the rent out because the value of the houses do not correlate by the rent you pay. So the less houses in the market, the more rent people tend to rent their property because there's no stock. People are not buying the stock in order to allow people to rent the property. Another opportunity could be long-term investment strategy. The opportunity you need to capitalize here basically is knowing property is long-term gain, because the thing about property, despite it appreciating value, long-term it appreciates in value. If you're a property investor, we know property prices tend to go up between 8 to 15% a year in average. Over the past 80 years, property prices has gone up significantly. So it may be low now, but if you're thinking long-term, if you're thinking long run, if you have a vision and mission to take your finances to the next level, level, then this would be one of the best times to buy properties at discount to get you to where you want to go. And maybe perhaps this is the time you want to diversify as well. You diversify your property portfolio. You look at the market where there's less property prices. Perhaps you want to look at family land. If there is lots of talk on normal houses, maybe you're going to go in and negotiate at that point. Take that property, do it up really, really nicely, and then rent it out. And perhaps you take that same property because it's cheaper, you then renovate that property to convert the use from a normal family house maybe to a HMO, house in multiple occupation, that would allow you to rent the house in a room by room basis. Perhaps you can take that cheap property, convert it into multiple units, maybe 1-bedders, 2-bedders, or 3-bedroom flats. Again, you're forcing the value of the property at that time, because that's what I did during COVID when the property prices shrank. What I was doing basically, I was buying these houses, converting them into multiple units, or maybe converting them into HMO in some occasions. So basically, that's the way you can diversify during this period as well. Or perhaps when the prices are cooling down, it's maybe about time for you to remortgage, because the interest rate has now stopped going up. If you're on a variable rate, maybe you want to start thinking about refinancing the places where your properties are still appreciating in value, so you can take the advantage for when the properties start going down in that area. So you can then pull that money, you would have pulled that money out to go again and buy more houses. And the other advantage you could really take on is staying focused and looking for relevant information to help your property investment journey. So literally stay focused, look at the property news, see what's happening in your investment area, notice what are the changes that are going on in your investment area, learn about it, make sure you implement what you're learning about it as well to protect you and your investment. You may be thinking, whoa, let me talk about my property investment portfolio. So now, in average, my property portfolio has been doing really, really, really well. We've seen massive capital appreciation during the past year. I think the overall portfolio has gone up by 15%. So it has done really, really well, better than what we thought. We were anticipating to be about 8 to 10%, but it's gone up by 15% despite the fluctuation on the property price. Hence the reason I told you earlier on that long-term property prices goes up. But now, how was I able to appreciate that? Because what we do, we buy dead, dilapidated houses. So once we bought those houses, we do them up, okay? We then force the value of that property. We remortgage at that point. In most cases, we put almost all our investment out. And then in about a couple of years or so, we remortgage again. We see that rise has gone up significantly, because I recently remortgaged just one of my properties. We were able to get back about £30,000. So they're doing really, really well. Some areas are not doing that much. Maybe the north of England, some pocketed areas. We haven't seen it going up the way we've anticipated. They were around 10 to 11 or 12%. Still, it's better than average, okay? Because the average so far is about between 8 to 10%. So they're doing really, really well. So in essence, the property portfolio overall is doing really, really well. Why am I sharing that with you? I'm sharing that with you for you to know that property is a long-term game, right? You have to stay in it to win it, okay? Go out there, buy the properties, hold it, hug it, kiss it, let it be for a lifetime. Never ever think about selling your properties, because they can always generate you income. Even if it's on capital appreciation, it can still generate you income by renting the property on a monthly basis or renting it on a lease basis. However way you want to do it, it still generates you income regardless what the value of the property is. So I really hope this video has been helpful. If this video has been helpful, go out there, look for property deals, and smash the like button below and subscribe to my channel for more amazing videos. I look forward to sharing next video.